Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. And this week, we're going to be talking about what's next for Nike after their quote-unquote disappointing fiscal Q3 financial results came out last Thursday. And then we're going to do a little bit of a Lululemon earnings preview with the yoga apparel firm set to report its Q4 results after the closing bell on Wednesday. But before we do that, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. So last Thursday, after the closing bell, Nike stock dropped on the back of its quarterly earnings release, and shares then fell 6.6% on Friday to close at just over $82 a share, which is down roughly 8% from their recent 52-week high. And despite the fall, Nike shares are still up around 27% over the last year. This outpaces the S&P 500's 11% climb and inches past the larger apparel market's 25% growth. And then we should note that after a really impressive 2017, its German rival Adidas is actually down 1% over the last 12 months. So that's how Nike's kind of doing in general over the last year in terms of its stock price performance. So now let's dive into why Nike stock dropped 6% and then look to see what we learned on its earnings call to see kind of what's coming down the road from Nike. So Nike posted adjusted quarterly earnings of 68 cents per share, which topped our 63 cents per share Zacks estimate by 8%. But that's pretty much nothing new for Nike. Its management team is excellent, and the firm almost never misses, and they pretty much always beat on earnings. So investors kind of see that baked into the cake already. Last quarter, Nike beat our earnings estimate by 15%. So that's not really going to do much for the stock unless they had a big miss. And then on top of that, Nike's quarterly revenue climbed 7% to $9.61 billion, and that also surpassed our estimate, which called for $9.54 billion. So a solid top-line beat as well. This did, however, come in a little bit below the second quarter's 10% revenue growth. So some solid top and bottom line movement, nothing really that would have signaled we're going to sell the stock off by over 6% on Friday. So that could be that some investors just kind of want to take their winnings at that point. But then there was also a little bit of a downturn in their key North American market, which is their biggest market and accounts for 40% of total company sales. And if you've been paying attention to Nike over the last year, you know that they've been able to regain some momentum because their North American sales growth has returned after an extended period of time of some downturns in this key market. So with that said, Nike's sales in its home market climbed 7% to roughly $3.8 billion. And if you take out currency exchange swings, it was actually up 11%, so pretty solid there. But this, however, did fall a bit short of our estimate, so that's never a good sign. And then it did also come in a little bit below Q2's North American growth. So that could have been really the one huge catalyst for the sell-off on Friday, was this little bit of a downturn in North America, which might have scared some investors with such strong performances in recent quarters from Nike in their home market. So as I said, though, despite this miss, this is still pretty strong revenue growth in North America, and it's topping. It's fighting off its rivals, Adidas, and then it's really at this point just blowing away Under Armour, who's kind of a distant third at this place. And we'll actually talk more about the companies who Nike might have to worry about in the long run as more of a company that would steal some market share. And then in terms of another big market in big business for Nike that Wall Street and investors should pay attention to, that was China. Its sales in the world's second largest economy surged 19% to $1.6 billion roughly, which came in above our estimates as well. And on a currency neutral basis, revenues were up 24%. So really solid there. And this was led by Nike Direct, which is their digital and their own company store businesses there as well, which was up 60% in China. And then once again, this is a story that investors have heard before in China. Nike's sales in the region are now up double digits for the 19th consecutive quarter, which is great news. And it's also interesting that Nike did relatively well last quarter, since a bunch of other hugely well-known companies have suffered as the Chinese economy slows down, particularly Apple. You had Alibaba with a big slowdown because of the slowing Chinese economy. So it's good to see for Nike investors that they were really able to maintain some strength in the region. And in terms of growth going forward, Nike sees that there even more opportunities, and obviously the company executives are always going to put a positive spin on it, but they're really pushing that they see even more of a long-term opportunity to really expand their brand, and maybe they're really just getting started in China. So then on top of that, the other big thing to watch for on top of North America in Chinese revenue is footwear sales, because footwear sales account for roughly 60% of Nike's total business. And luckily, those were up 9% in North America, which outpaced their overall growth in the region of 7%, and then 19% in China, which pretty much matched their overall top line growth. And then overall, as a company, Nike brand footwear sales were up 9% to $5.6 billion. So solid footwear sales, which is a good sign because, as I mentioned, that's pretty much Nike's core business, 60% of sales. And then as well, it was up in all of its other regions, which are a little bit less important: Europe, Middle East, and Africa, up 6%. And then their Asia Pacific and Latin America, which is by far their smallest region, climbed to roughly 3%. But in general, North America, China, footwear sales, all strong. North American sales came up a little bit short of Wall Street estimates, which likely led to the big sell-off on Friday. And then we should also mention that in terms of their business, they also own Converse, which I had speculated on this podcast before could maybe be a bigger growth business down the road as this trendy footwear business continues to grow with this old school look. But in terms of retro footwear, Adidas actually saw a bit of a downturn in their retro business, and Converse at the same time fell this past quarter. Converse sales were down 4%, but it's still under $500 million total as that business. So it's a really small portion of the business, but obviously a 4% drop off is never a good sign. And now I want to talk a little bit about what we learned on Nike's earnings call, because this really gets into their bigger business and what we should expect going forward. So right off the bat, some of the big businesses and brands within Nike, obviously North America, and in North America, sportswear, Jordan, and then running, as well as some of their women's businesses, really helped drive sales overall in the region. They're also noting that they're trying to roll out more footwear collections. They call it collections. Under the $100 price target. They see that as a business that could help them grow going forward. And then they also are trying to roll out more women's focused gear. They're rolling out more yoga style clothing, which is going to be in competition with Lululemon, who we're going to talk about in a little bit. And then they're also rolling out a bigger women's Jordan women's brand as well. So we're going to see all that as well. And then Nike CEO Mark Parker noted on the conference call, which I thought was relatively interesting. Nike is obviously a huge advertiser. They spend hundreds of millions of dollars every year on their advertising campaigns. They're pretty historic in terms of scope of ads. They're ones that people remember in terms of commercials. And they noted that their new Dream Crazier commercial, which is geared towards female athletes, broke several of their consumer engagement records across North America as well as China. It said in Greater China, the campaign reached 600 million views in just the first 3 days and was one of their most ever engaged things in the country. So it's interesting to see that growth in terms of their women's business. It's something they're really going to focus on down the line. And then, as I mentioned, in terms of that reach, 600 million people watching something within 3 days in one country, that's part of their larger social media push, which blows away Adidas and Under Armour, especially on Twitter and Instagram, which is going to become, as I've mentioned now ad nauseum in the show, hugely important because you can now shop directly from Instagram. Brands are kind of built out of scratch on that platform from going forward, this is going to continue, as I said, to be a huge portion of their business that is really, really vital going forward. And this is part of their larger digital expansion, which is what they talked a lot about on the earnings call, because at this point, they're not really breaking down any of their digital numbers just yet. But Mark Parker did note that Nike's digital business grew 36% on a constant currency basis, which was far more than any of their other segments, and reached $1 billion in revenue for what they said was the first time. This did fall a little bit short of last quarter's 41% digital revenue growth. Still, that's solid going forward. And as the company's talked about again and again, they see this as being one of the biggest portions of their business. Last quarter, their CFO mentioned that he expects the digital division to make up 30% of their total sales by 2023, up from roughly 15% at the moment. So that's, once again, going to be something to continue to pay close attention to, as it could account for 30% of their business, just digital sales. And they noted that the retail stores are also benefiting from these apps that they're rolling out, where they're noticing that people that are using the Nike app and the Nike Plus memberships are spending 40% more in stores, which is very interesting to think that you're getting such a boost from people who are mobile. Your mobile app is encouraging people to come into stores and spend more in stores. So it's not just digital only, it's that you're building this brand through apps and through these relationships kind of a constant way, which is something that Nike got into as well. And then along with this larger digital push and their direct-to-consumer push, we should note that Nike has, for the last couple of years and will going forward, kind of focused on 12 key cities across 10 countries. And they kind of see these countries and these cities in particular creating the culture and creating the style, and then it kind of trickles out to everywhere else. This is where they focus a lot of their new concepts in brick and mortar and roll out their digital apps and on a trial basis, and then it extends everywhere. So I just want to quickly mention these cities, and they seem all too obvious, but it's totally worth talking about in general, because this is where they're focusing a large portion of their innovation going forward. This is New York City, London, Shanghai, Beijing, Los Angeles, Tokyo, Paris, Berlin, Mexico City, Barcelona, Seoul, and Milan. And then it all trickles out from there. They're testing everything out in these locations, rolling out all of their apps on a trial basis, kind of, and seeing what works and going from there. So then I want to just now quickly look, because I could talk about the earnings call forever, but I want to quickly look ahead on what Nike is expecting, and then a little bit of more of their fundamentals, and then we'll talk about Lululemon ahead of their earnings release on Wednesday. So Nike executives said they expect revenue to rise by high single-digit percentage in the company's fiscal fourth quarter. And then in the end, they also talked about how they're going to remain key relationships with Foot Locker and Dick's Sporting Goods, as Nike's business continues to kind of drive Foot Locker as a whole and has helped propel Dick's as well. And then overall, we should mention that the footwear business is strong, and it's not just Nike. Adidas is doing well, even though their stock price isn't doing as well. Their revenue jumped 15% in North America in their most recently reported quarter, but they did note that going forward this year, they think supply chain bottlenecks will kind of prevent reaching all the demand, so they're seeing a little bit less positives going forward this upcoming year. But in general, the footwear business in North America is still strong, so Nike is going to grab a huge portion of this market that continues to grow. And then in terms of how the company is doing itself, or how the stock's doing, Nike's trading at 29 times forward earnings estimates right now, which is not obviously, but it's way higher than the S&P 500's average, which is about 16.7, and it's way higher than the industry's average, which is 20.2 at the moment, and it's way higher than Adidas at 20.6. And it's also higher than its 5-year median, so it's trading a little bit above where it has been over the last 5 years. So you could say its valuation is a little bit stretched, but Nike's a dividend payer, and it's going to continue to be one of the biggest companies and biggest brands in the world for what I would assume is years, if not decades to come. So we'll continue to monitor Nike going forward as they roll out more women's focused gear, more athleisure, and then obviously their footwear business is going to be huge for the company for years to come. But now I want to talk about an athleisure business that Nike is now having to compete directly against in something they're focusing on with some of their product rollouts, and that is Lululemon. And they've been a big company for the last couple of years on Wall Street as a really top performer. So we're going to look at what to expect from their Q4 and full year 2018 financial results, which, as I mentioned, are due out after the closing bell on Wednesday, March 27th. So Lululemon stock is up 18% this year, which is above the S&P 500. It's 14.5% climb. And in general, as I've mentioned before, we have some positivity going into Lululemon's earnings results this week. Last week, Barclays analysts kind of went into why they see so much upside. They reiterated their overweight rating and gave Lululemon stock a $200 per share price target, which represents roughly 39% upside to Lululemon's closing price the day before they released that analyst note. So they basically are just saying that and this is Matthew McClintock, one of the analysts at Barclays, he had a huge note, but in the end, he's saying that he sees Lululemon's addressable market as way, way larger than even the most optimistic estimates have at this moment. And this is kind of going along with what Lululemon has done. They started as a women's focused yoga apparel and athleisure brand. And since then, they've really expanded. They now sell men's and women's outerwear. They're selling jackets for as much as $600 to compete against Canada Goose, VF Corporation's North Face, Columbia, and some other higher-end brands. They're now boasting a lineup of shoes, accessories, and also some more work-appropriate and fashion-focused offerings. So not just athleisure, but something polos and all of this stuff that you might not even tell is at all something you could wear to the gym, but it's something that Lululemon's selling at sometimes even higher price points than their athleisure wear. And this is going to be hugely important going forward as more and more office environments kind of relax their dress codes. Even bigger businesses that have been notoriously more business casual or business professional up to this point are slowly offering the option of, as I said, more relaxed dress codes. This is going to be a hugely addressable market going forward. And then, as I mentioned, they're trying to expand their men's business. And earlier this month, they signed their first men's ambassador. And it's not a person you'd really think. It's not a golfer who I've speculated that Lululemon would sign for a long time because they do have polos and gear that would really easily translate to golf. But they signed NFL quarterback Nick Foles. So this is kind of a crossover into getting maybe someone that would be traditionally a Nike sponsor or an Adidas sponsor, or even Under Armour sponsor, to get this big NFL quarterback who just signed a huge contract this offseason, won the Super Bowl a couple years ago. It's a big step for Lululemon as they're trying to kind of expand and to grab a new demographic of maybe people who had traditionally bought Nike gear or Adidas or Under Armour going forward and might not even at this point be aware of Lululemon in general. And then Lululemon's success is also kind of, as you see followers, you know that you're doing well. So quickly, the Gap has rolled out its own menswear athleisure business on top of its women's athleisure business. It's like a standalone business. And then we've also seen some growth from companies such as Austin, Texas's Outdoor Voices, which has expanded its retail footprint kind of across major cities in the U.S. over the last year. And then we should also mention, on top of all of their other growth initiatives, Lululemon is rolling out a loyalty program as they try to navigate this new retail age, and then also create this this brand building through this new loyalty program. They're also rolling out a line of self-care, which would be just what it's makeup, deodorant, that kind of thing. They're rolling that out. This is also coming at a time when Walgreens is partnering with trendy subscription brands to attract a younger kind of upscale customer. So all of these are happening. They're also trying to expand their business in key Asian regions. And in terms of their overall footprint, they closed the third quarter with 426 stores around the US. But now let's just quickly, after we've just kind of addressed their business in general, let's look to see what to expect from the business this week. So in terms of revenue, Lululemon is projected to see its fourth quarter revenue jump 23.7% to reach $1.15 billion. This is based on our Zacks estimates at the moment. So this would top last quarter, so Q3's 21% top line growth. And then at the same time, its full year revenues are expected to surge roughly 26% to reach roughly $3.3 billion. Interestingly enough, for a business that's already done so well, this year's growth would almost double last year's overall top line growth that climbed at just 13%. So we're calling for 26% full year growth in revenue over last year's 13% growth in revenue. So that's a solid number there. And then in terms of its adjusted Q4 earnings are expected to climb roughly 31%, which is a solid number there as well. And then in terms of its full year earnings per share figure, it's expected to surge 44.4%. So on top of that strong revenue growth, our Zacks estimates are calling for some really strong bottom line growth as well. And then heading into its earnings, it's seen a lot of upward earnings estimate revision activity, so that helps it currently sport a Zacks rank number 2 buy heading into its earnings release on Wednesday. It also sports an A grade for growth in our style score system. And then, as I've mentioned before on this show, they really do have some big long-term growth plans, and executives leading up to the fourth quarter have upped their estimates on the back of stronger than expected holiday quarter sales. And then they've also reaffirmed their goal of reaching $4 billion in revenue by 2020. And this includes now having its menswear business reach $1 billion. So this is going to be a fun company to continue to watch. As I mentioned, as part of this larger athleisure business that really doesn't seem to be losing any momentum just yet. But that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.